In today's video, I'm going to be introducing you to Aaron Benton, my trusted mortgage professional, who's going to be telling you everything you need to know if you are retiring in the South Carolina Lowcountry or if you are relocating to the South Carolina Lowcountry. And towards the end of the video, we're going to get to know Aaron's story just a little bit more because he actually went from being a high school math teacher to one of the top mortgage professionals here in the South Carolina Lowcountry. So if you want to hear about all that, stick around because we're getting after it right now. Do you want to know everything there is to know about the South Carolina Lowcountry, whether it's Bluffton, Beaufort, Hilton Head Island, or Jasper County? Then subscribe below and tap that bell for notifications so you'll be the first to know every time I put out a new video. My name is David Simcox, host of this channel and a local real estate agent. I get calls every day from people just like you looking to make their move here, and I absolutely love it. So whether you're moving in 3 days, 3 months, or even 3 years, give me a call, send me an email, shoot me a text, or you can always book a Zoom call by going to lowcountrylifestylesteam.com. Now, without further ado, let's jump into the video and let's get to know Aaron Benton. Aaron, thank you so much for jumping on camera with me today and talking to me and talking to the person watching this to tell them everything they need to know if they're a retiree or if they're relocating to the South Carolina Lowcountry. We've been working together for quite a few years and have a pretty good friendship outside of this, so really appreciate the business relationship and also really appreciate the friendship and everything. So let's get started. Are you ready?
Absolutely. Thanks for having me.
Yeah, absolutely. And you've been on here before.
Yeah, this isn't my first rodeo. I think this is probably my third or fourth time with you. So I'm very excited to jump in and just answer whatever you want to ask me.
All right, so we're going to start off with questions that pertain to the viewer, and then later in the video, we're going to talk about you and sort of your own personal journey and how you got into this business so they can get to know you just a little bit better. Because if they're going to be doing one of the biggest financial transactions possibly of their life, they probably want to know who they're working with.
Totally agree. Very excited. We'll talk about business, and then we can dive into who I am as a person. I can understand that.
All right, so a lot of people watching this channel are either retired, they're getting close to retirement, or maybe they're relocating for some type of quality of life. From your perspective as a lender, what are some of the most important mortgage related questions that they should be asking, but maybe they don't?
The numbers. When you're looking to purchase and you're looking to move here, just simply going online, you're not going to get the full story. South Carolina has different taxes, whether it's your primary residence versus your non-primary residence. Now that does get reassessed or can get reassessed once you move here. So there's a lot of people that will buy a non-primary, right, a second home, and eventually the long-term plan is to move here and their taxes will change. But simply going online and maybe scrolling a Zillow to see what the previous owner was paying, that's not going to give you the exact story. The other figure here is insurance. We're so fortunate because we're close to the water. It's beautiful by the Atlantic, the beaches, and so on, but there's a cost to that. Our insurance is typically a little bit greater than what someone from maybe the Northeast or the Midwest is accustomed to paying, just because of our proximity to water. And lastly, like the HOAs.
What does HOA stand for the person that's watching if they haven't heard that term?
Yeah, homeowners association. So they're going to have, there could be a monthly cost associated with that, or maybe an annual cost. And really that is your amenities. You as the real estate agent would know all that it entails, but I really care about what is the number. Now, I'm sure you as the viewer would care what the number is as well. It's coming out of your pocket. So that can get paid on a monthly basis or an annual basis, but then there's also this transfer fee.
Right, and which becomes a closing cost.
Which is an upfront closing cost. And that is something that we have seen over the years. That has changed. All of these communities, there is this upfront transfer fee or initiation fee. It's variable by the community, depending on the amenities, or maybe there's a project that the association is wanting to build or handle. You could see a change in this. So just getting those numbers up front, very, very important, because browsing the internet or talking to somebody that is not local to our market, those are numbers that are simply going to elude you until about 3 days before closing. Luckily, we're local and we know the right questions to ask and we know how to get you your answers.
And they don't appear anywhere online. If somebody's going to, like you said, Zillow or Redfin or anywhere else, they're not publishing that data.
That's correct. I mean, they're going to publish what the previous owner or current owner is paying, because that would be a tax record. record. But when you start, Beaufort County assesses the value of the property. So whenever you sell, you're instantly going to be reassessed based on purchase price. And that assessment takes place, and occupancy takes place based on January 1st of that year. So what I tell people is, hypothetically, if you were to buy a house in March of 2026 and January 1st of 2026, the seller was their primary residence, you're going to get grandfathered into that seller's tax bracket because as of January 1st, it was not owned by you, it was owned by the seller. Now, fast forward, and now Beaufort County or Jasper County or South Carolina in whole will see, hey, this house has been purchased in the year 2026, and that's when you will see the taxes will adjust. Now, one thing that happens after closing, unrelated to me, in South Carolina, remember, there is a primary tax rate versus a non-primary tax rate, and there are forms that you need to fill out to prove that this is going to be your primary residence. You would not believe how many people come to me if they were to say they closed anytime in 2026, and in 2027, they'll come to me and say, Aaron, my taxes went up because they didn't fill out the necessary paperwork after closing, proving that it's their primary residence.
And they do get a little tax break if they're watching and they're 65. Is that correct?
Yes, the homestead exemption. Yep. So you handle all of that through Beaufort County or Jasper County or state of South Carolina, but it's something that post-closing, I will of course talk to you about it. Your attorney will talk to you about it. And it's really just a form that you have to fill out, and then you have to provide tax returns, maybe a utility bill. Pretty self-explanatory, but it is something that you have to do in order for South Carolina to give you that primary tax rate.
Okay. So I'm going to move on to the next question. So a lot of people that watch this channel, they're moving into, like, maybe they're moving here for retirement, or maybe they're moving into a luxury community. And a lot of where they're moving from, they've paid off their house and they have cash, or they're in a position where they can pay cash. And a lot of people assume that if they can afford to pay cash for a house, they should. But that's not always the smartest move. So what are some strategic reasons that people might still choose to take a mortgage with you, even though they could pay cash if they wanted to?
This is a very fair question. A lot of people, there's the mindset, hey, I don't want debt. Well, there's a difference between bad debt and smart debt. Houses typically appreciate in value. Taking out a mortgage on appreciating value is something of value. And really what happens is we come across, you and I will come across a lot of times, individuals who just need short-term financing, right? You own your current home. Ultimately, you need to buy the next house, but all your money is tied up in the house that you currently own. You can get a loan and utilize short-term financing. That is going to basically free up your home sale contingency, because as you as a real estate agent would say, once you're making an offer contingent upon home sale, the strength of your offer starts to diminish a little bit, because when it's a home sale contingency, you don't know how many contingencies are there down the road. And so you can, of course, get a mortgage for short term, just in that period of time between when you buy the next house, this future primary or second home, you buy it. Yes, you have your left behind house. The minute you sell your left behind house, you can pay this loan down or pay this loan off. So it doesn't mean that you have to have the mortgage forever. Now, the other piece, I come across a lot of people that don't need mortgages, like you said. They certainly have the ability to pay cash, but financial advisors, I've spoken to them many times, they say, I can get a rate of return on your money of 8%. If that 8% is the growing average, and I'm writing you a mortgage less than 8%, which historically speaking has been very consistent over the course of many years now, you can be money ahead simply if I wrote you a mortgage at 6% and you're getting a rate of return of 8 on your investments, that's plus 2%. So your financial advisor might like the idea that you're getting a mortgage simply because your money can work smarter in the marketplace. The third piece would be kind of a tax advantage. So I'm not a financial advisor, I'm not giving you tax advice. However, I come across a lot of clients who are utilizing a mortgage as a tax benefit to them, because what they're doing is they don't want to shell out or sell their securities, thus incurring capital gains. And say they bought the house for $1.5 million. They don't want to pay capital gains on $1.5 million. Rather, they get a mortgage, and every single year they systematically pay that mortgage down, therefore liquidating some of their stock portfolio, but they're working with their financial advisor so that they're not shifting tax brackets and they're keeping everything in check. So yes, you could get a 30-year loan or a 15-year loan, but that doesn't mean you have to have the loan for that long, right? So individuals will systematically come in and they pay that loan off in 5 years. And really what you're looking for is, how do I limit my total interest paid over the life of the loan? Well, you can pay chunks down, manage your taxes. So you're avoiding mass capital gains and shifting tax brackets, if you will. And at the end of the day, you're utilizing this mortgage as a vehicle to not have to shell out so much money to the IRS.
And a lot of the costs associated with a mortgage are tax deductible. Is that fair to say?
So when you have a non-primary residence, you have a Schedule E, and you're going to be able to write off your mortgage interest. So yes, that will be a write-off. I have a rental property, and I am able to write off the mortgage interest as an expense, which will then help, again, my taxable income at the end of the year.
All right, let's move on. So for people that are relocating here and maybe they're living on Social Security, pensions, investment incomes, how do you as a lender evaluate those types of income when somebody is applying for a mortgage?
Great question, because I get it all the time. People will ask, I'm of retirement age. I hear that I don't have a job even, right? That's exactly what you said. I'm getting Social Security income, maybe a pension. I'm sitting on a boatload of money in my IRAs. I have money in investments, but I really don't have a job. So how do I qualify for a loan? Well, I can use your Social Security right away. I can use your pension right away. And the mortgage guideline is any kind of income that exists or has the potential to carry out for at least 3 years is an acceptable source of income. So if you're greater than 59 and a half years old, you could set up an IRA distribution. And with that IRA distribution, I could take the value of your IRA, I could divide by 37 months. Why? Because 3 years is 36 months. I got to have a continuance or a potential continuance of 3 years, and I'm going to see the first distribution prior to closing. So if I'm sitting on just say a $1 million IRA, I divide that by 37, and that can be usable income for you to qualify. Now, there are other strategies that you can use. I have a product where, let's just say you are of retirement age or you're not. Let's say that you are just transitioning here, you don't have a job, but you have some money in the bank. Maybe you had an inheritance, sold a business, and what I can do is I can actually take that portfolio that you have and divide by 60. That is a new kind of wave of thinking. It is not a Fannie Mae, Freddie Mac loan. It is considered a non-qualified mortgage, which is gaining a ton of steam, these kind of mortgages. They're not bad loans, they're good loans. All non-qualified mortgage means is that they are slightly outside of the guideline of Fannie Mae and Freddie Mac. And there's nothing wrong with that. With these asset depletion, it's called, I take the portfolio and I get to divide by 60. So a very, very powerful way to create income in the terms of how can you qualify for a loan.
Okay. All right. Now, I almost thought this was a silly question, but I'm going to ask it anyway because I think that some people may be thinking about this. Some people think they're too old to get a mortgage. Is age ever a factor when you get a mortgage?
I get that question a lot, believe it or not. So never that would be illegal. I would be discriminating against you for age.
Yeah.
So you could be, we'll just throw it out there, you could be 90 years old and you could get a 30-year mortgage. Hopefully you make it to 120, but if not, there is no age cap there. We will not discriminate against you based on your age.
Okay. Last question related to mortgages, and then I want to talk to you a little bit more about who you are so that people can decide if they know you, they like you, and they trust you and want to work with you. So last question is, if somebody is relocating from another state here to the South Carolina Lowcountry, what are some of the biggest mistakes that they make, maybe if they go with someone other than you?
I think that a big mistake is wanting to do your own research up front. Now, there's nothing wrong with doing research, getting a pretty good grip of what's going on, but kind of like what I led with, the numbers that you can find online are not going to tell the whole story. There's a lot of times when I will talk to people and they'll come to me and I'll say the numbers are this, and they're like, I was using the different tax figure, or the insurance was higher, or I didn't take that into consideration. There's nothing wrong with getting some really good local advice. I used to be licensed in New York because that's where I'm from originally, and with that being said, whenever I wrote a loan in New York, there was always a little bit of uneasiness simply because it wasn't my backyard like it is here. So I think that getting out in front of it, I love, especially your clients will call me in advance. And I just think that it's very beneficial to know your numbers, understand what you are ultimately embarking on, and do that sooner rather than later, because it's never enjoyable to maybe look at $1 million property when really your numbers that you were thinking were more geared towards an $800,000 home. Or maybe you were the other way, right? You kind of shorted yourself. You thought you could only get $1 million, but I'm telling you 1.2 million. And wow, there's a lot of homes at 1.2 million that you really would have liked, that you kind of just let pass on. So I think there's no shame in reaching out early. I think that's really a smart move and an admirable decision to make, just to get some boots on the ground, really good local knowledge. I mean, a lot of people will talk to you and, you want to understand the neighborhoods. Well, once you understand the neighborhoods, I think it's also smart to understand, what's this going to cost me?
A lot of times on this channel, I'll tell people whether they're watching in 3 months, 3 days, 3 months, or 3 years to give me a call. It's just kind of a little catchphrase I use, but at what point should they reach out to you?
I have people reaching out to me a year in advance. Now, again, I've had people also reach out to me the day that they're going under contract. However, it's nice to understand your numbers. I say to my people, it's never too early, but if you gave yourself a 4-month cushion, that's a really smart thing. Now, the other thing is before you go out and you fall in love with something, you really want to have an idea. So maybe your timeline is different. Maybe you've already zoned in on, I want to be in Berkeley, Hall, Colleton River, Plantation, something along those lines. If you have those neighborhoods already preconceived that that's what you want, maybe we should start talking about the numbers pertaining to those properties or those neighborhoods.
Yeah, and I think talking about like mistakes that I see people make, I think there's a huge value to working with a local lender, whether it's you or somebody else. You're my favorite, but there are some other good ones here in town. But there's a lot of nuances here, and nothing scares me more when somebody comes to town and they want to spend 3 days looking at everything with me and they're carrying a pre-qualification letter from some online lender. It scares me because they don't know the neighborhoods, they don't know the nuances, and when you go to present an offer, the agents on the other side are not going to be as susceptible to that offer if they don't know the name on the pre-qualification letter. So that's the last point I wanted to make. All right, now we're going to talk about you. Are you ready?
Bring it on.
All right, so you are one of the top mortgage professionals on Hilton Head Island and here in the South Carolina Lowcountry. I don't know the exact ranking, but I would guess in the top 5. But before that, you were actually a high school math teacher. What did life look like back then?
Vastly different. So, high school math teacher, moved down here right out of college, and the minute I started as a math teacher, about 2 weeks in, I realized I had to work in food and beverage, which is unfortunate because I think teaching is an admirable position, but from a making ends meet in South Carolina, I just didn't make enough money to support my family, my lifestyle. And we started off, and so it was, I would work at the school, and then sometimes I'd go directly and work in food and beverage. And then in the summer months, I would work in food and beverage. So I never really got a break.
Yeah.
I always felt like in order for me to make money, I had to physically be present, right? You had to be at the school as a teacher. You had to be physically present in food and beverage. So it was vastly different because now I have an office on Hilton Head. I live here in Bluffton. But with that being said, I'm able to work from home. I can be flexible. I'll take calls on weekends. I'll take calls at night. I mean, I can be flexible to whatever my clients need, whereas my life was definitely more regimented when I was in the educational field.
And when did you start to feel sort of a pull away from that to something new? The mortgage industry is what you chose. Was there a specific moment that you were like, this has to change, man?
The dirt. You want the dirt. So what happened was I got my master's to become a principal. Yeah. And I actually applied for some positions here and I didn't get anything. And the reason that I didn't get them was I was told I didn't have enough experience. It kind of rubbed me the wrong way because in order to get experience, someone has to take a chance on you. You could have been 30 with no experience. You could be 50 with no experience because someone has to take a chance on you. So that kind of opened my eyes to how long would this carousel last of, hey, I don't have enough experience. Or any experience really. So at the time, my wife, her uncle was getting a loan, a mortgage through my now boss. And they were having a conversation and they were talking it's hard to find good or nice people here that are willing to work hard. And so my name came up and I had an interview with my now boss and he didn't want to hire me. And the reason he didn't want to hire me is because I was fast tracking an education, right? I was salaried employee, be able to project out what I'm going to make, very similar to the real estate world, right? The probability of success us is relatively low among our peers. We're very fortunate because we've certainly gravitated and people have latched on and wanted to use our services and use us, which I'm very thankful for. So he didn't want to hire me. And I kind of came back to him a second time. I said, you got to give me a chance. Simply because the risk reward, I was a high school math teacher. I taught every grade from 9th to 12th. And I was also a middle school football coach. And I just said, well, if I don't make it as a loan officer, then I'll just go back and I'll teach. High school math teachers were not necessarily falling off trees at the time in South Carolina. So I said, maybe I won't land back at Hilton Head High School, but I could find a job, maybe locally, maybe a little bit distance, but I could land on my feet. And so when I weighed the risk reward, he finally said, all right, I'll give you a shot. So I kind of worked my way in through persistence. And I'm so glad I did because, like I said, the flexibility that it has provided my family and my ability to help people. This is my job as a loan officer is so similar to teaching because instead of talking to people about or kids about numbers, and I'm talking to adults about numbers, I'm talking to them about their pocketbook. And I always make the joke because the number one joke is the difference between me teaching the kids and me teaching the adults is the adults are listening because I'm talking about their pocketbook.
Cool. So you became a mortgage professional. What did you have to learn and do as that process started?
So there's a huge push-pull because what happens is you want to understand all the guidelines, all right? There's a ton of mortgage products out there from conventional financing, FHA, VA, USDA, jumbo. So the stack of guidelines that I'd have to read would be probably hundreds of thousands of pages long. And every time you talk to somebody, you want to make sure that you have the answer. Well, the reality is that we come across a lot of unique situations. I might not know the answer right off the top of my head, but that's okay. You can acknowledge, hey, I don't know the answer right away, but I will get back to you very, very quickly. That is acceptable. And that way I'm not talking out both sides of my mouth or what have you. So it was a really hard work because I would try to establish business and build relationships. When I first started, my number one referral source was Hilton Head High School. I left on great terms, and it was right after COVID, or not after COVID, it was before COVID, but during COVID, people were refinancing, right? Interest rates had dropped to a favorable level, our best we've had in a very long time, and people were refinancing. So I was able to see my book of business increase relatively quickly because of the high school people I knew, and then word of mouth. So very, very positive experience there and fortunate.
So you're a family man. And when you first got into the mortgage industry, did you have some internal doubts and fears about this commission-based career that you had chosen, having to support a family?
Absolutely. So I went from 100% salary, granted food and beverage was tips, but this is 100% commission, and certainly makes you work hard and certainly makes you be very, very attentive to everything that goes on. But yeah, there were some growing pains there. My wife was working at the high school still, and she was working a second job, and I was just grinding as I am now, but a different kind of grind. And there were definitely times when we said, I don't know if this is necessarily the best decision because, gee, there isn't a paycheck coming in this month. And my company actually put me on what was called a forgivable draw. And
you pay it back.
That's right. So I was building a bank of debt. I was building a bank of debt for the first couple months. And then once I finally made enough sales to be able to pay that bank of debt back, I never looked back, but you can imagine it was going into the holidays, and not only did I have my holiday shopping to do, but I also was accruing this bank of that had some stressors to it.
So that raises sort of an interesting philosophical question I just want to touch on. So if somebody is watching this right now and they're saying, is it better to stay in a stable career, feel safe, or take a risk that might lead to something better? How did you wrestle with that, and how should they wrestle with that?
I made my decision because it was my wife and I just noticed that in the educational field, I was going to make whatever the standard was, right? I mean, an assistant principal gets paid what an assistant principal gets paid. And I wanted to be able to have the opportunity that my hard work would show dividends in a financial way, right? And I also saw the flexibility that this position brought. Now, granted, I work significantly more than 40 hours a week.
Yeah.
I'm working on weekends and nights. times that are flexible for others, right? So there is sacrifices that my family makes on a single day, where if someone were to call me at 6 o'clock at night, dinner might get pushed back a little bit. I'm very fortunate. My wife is a saint. She's grappled with that, and it's good now. But I will tell you that I took the risk. I would encourage somebody to take the risk. But remember, mine was a very calculated risk, because I talked about risk versus reward.
Yeah.
I had a plan B kind of, I didn't have it completely set out, but I had at least an idea of what my backdrop would be. And so if someone is willing to take a risk and they understand what the consequence could be and there's a backdrop, I think taking the risk is great. If you are just jumping in 2 feet and you have no fallback plan and no plan B and no idea, then I definitely think you want to make sure you run that one to the ground, because like I said, we're fortunate. We have been able to grow our businesses, but not everyone is as fortunate as us.
Was there a specific moment that you remember that really you were like, I made it, I am a mortgage professional, like the identity as a teacher is gone, and you're like, I have arrived, I am the man, or so, you know what I mean? Like you feel like you are the real deal in this new industry.
I don't think I've ever gotten to that point. So I would say this. I think
But you won a lot of awards and stuff. I mean,
yeah, but the goalpost always moves, right?
Yeah.
I think that, yes, there is competition amongst other lenders and things of that nature, but really what I always strive for is the best experience for my clients and for myself. And yes, we can do more business, and there are procedures and things that we have worked on to refine our process and refine, like for instance, one of the things that I had talked about was being able to be productive and not necessarily be boots on the ground. I have been in Mexico and I've taken phone calls. I have been in other states and I've taken phone calls, and at that time, no one necessarily knows, like, hey, okay, he's not sitting in his desk in Hilton Head right now, but I can give them the same tailored attention. So I don't know if I feel like I've ever arrived. I would say that I'm fortunate where I'm at. I think there's still more to be accomplished. And I do think my identity has changed, right? I don't think people view me as Aaron Benton, the teacher anymore, but I'll give you, this is such a good, timely question, because I received an email yesterday, and it was someone who was relocating from Charlotte back to Hilton Head. And the email said, I'm so glad you're in mortgage business. You were at Hilton Head High School when I was a student.
No way.
And so we see that you're in the mortgage world, and we want to relocate back, and we want to know, what do we need to do to get pre-approved? What an awesome experience, right? When your former students, if you were like, hey, I recognize this guy, but they saw me as a teacher, but now it's identified as, this is the mortgage professional that we want to work with.
That's cool. So this whole transition from math teacher to mortgage professional, how do you think that changed you just as a person overall?
I am very in tune with world matters. I pay attention. So when I was a teacher, it was very, I don't want to say narrow-minded, but you'd go to work, you would teach your curriculum, you'd work with the students. Of course, you might have internal problems with kids or classes, but you'd work through those, and then you could go home. Now, I mean, when we start talking about interest rates, there are global phenomenons, and Wall Street, there are things that take place in the world that I need to pay attention to that directly impacts my business. So I'm definitely more aware of what happens in worldly matters. I think that, like I said earlier, I have a little bit more freedom to travel. Like for instance, this upcoming summer, we're going to a wedding and we're going to take a road trip. We're going to go up to Cape Cod. We're going to go up to Maine. We're going to enjoy the Northeast. I'll still be working, but it allows us the freedom as a family to enjoy other paradises outside of where we live here in Bluffton.
Well, that kind of touches on the last question of the interview. So you made this big change from one profession to another, and it not only affected you, it affected a lot of people around you. It affected your wife, it affected your children, it affected countless customers that you've helped. Can you share just a couple of those stories of how your decision and your risk has maybe positively impacted others?
I would say that one of the stories that I have is when someone is looking to relocate. They're trying to crunch all the numbers and they want to be linear. They want to sell their house first, and then they want to move here and they want it all to work out. And then all of a sudden they kind of get met with resistance, right? The seller says you're not going to have a home sale contingency. Instead of the deal falling apart, that is when I start to work my magic.
Yeah.
And you start to craft some numbers and you say, listen, you can qualify for carrying both properties. This is short-term financing. Some people will use the phrase bridge loan. That's something for a different segment of what everything entails in a bridge loan. But ultimately, it's short-term financing. The deal gets accepted. They buy the house that they want. They get the dream home. Eventually, they sell their left behind property and they get the end loan and the end thing, or maybe they don't have a loan at all. They get what they want at the end. They had to make one additional step, that was getting a mortgage. And in turn, for that one-time little hiccup or roadblock, they were able to recognize their dream. I mean, I've had other examples where people have been denied by other lenders. I just had one a couple weeks ago. They were denied by another lender because of income, and we got in and we were able to close the loan. Just using just a different kind of product made it all work. Now, that individual did pay a slightly higher interest rate just because it was not a conventional loan, but we're going to refinance her in a year or so. Those are the conversations that you have of how do we make it all work? And nothing is more exciting than when someone gets to the finish line and you say to them, thank you for following my vision, right? Because when we talk, you're fun. People get to see the house. They can tangibly maybe touch the cabinets, the countertop, look at the yard. In my world, I'm weaving them through a wood sometimes. They know what the finish line looks like, but they're like, how do I get there? And they put all their trust in me, right?
It's financial gymnastics.
Absolutely. They have to trust me that what I'm saying is going to work. And they trust and they follow through with my step-by-step guidance. And eventually we make it to the finish line and it's nothing but smiles. And all I can say, it's funny because they say thank you to me, but I say thank you to them because I say thank you for listening and thank you for following the plan. Because if you would have taken a misstep or gone, derailed it, we wouldn't be standing here. So you get just as much credit as I do because you listened.
And it's been great for your family too.
Absolutely.
All right. Well, thank you for being on the show today. And if somebody is watching this and they want to get to know you better, they want to run some numbers with you, what's the best way to get in touch?
Yeah, I think that everything should start with a phone call, just so that I understand your situation. Everyone's is a little bit different. That's why you would talk to somebody like myself, because you want to understand what your options are and craft through how do we actually make it to the finish line. And my number is 843-505-5623, or you could go onto my website, the letter Benton.com. So just so you know, the I is for Isaac. That's my middle initial.
All right.
It's not artificial intelligence. It's Benton.com.
Sounds good. Well, thank you, man. I really do appreciate it.
Yes, of course. Thank you for having me, David. This is always a pleasure to be with you and talk to the lovely people who are watching your videos.
Yeah. And of course, I only recommend people because they treat people the way that I want to treat people. So that's why you've earned my business.
Thank you so much, David. Such a pleasure as always. And one day I hope to talk to you as well.
Thank you so much for staying till the end of the video. I hope you enjoyed learning everything there is to know about retiring or relocating here in the South Carolina Lowcountry and all the mortgage questions. And I hope you enjoyed getting to know Aaron Benton. And of course, if I can help you find your own Lowcountry lifestyle, give me a call, send me an email, shoot me a text, or you can always book a Zoom call by going to lowcountrylifestylesteam.com. As always, I hope to meet you in person at some point, but if not, I will at least see you on the next video.